Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
And now, ladies and gentlemen, as Rakesh already mentioned, I am now requesting Sreyssha George, Managing Director and Partner at BCG, to come up on stage and share her insights on the lending space in India. Sreyssha, all yours.
Change is inevitable. Growth, on the other hand, is optional. Morning, everyone. Very excited to kick off the session with all of you. It's wonderful to see a full room today. Let me start with a bit of change. I think everyone here will agree that we are living in uncertain times. There's a lot that has been happening. If you just look at a few simple metrics across the globe, our global risk index is 90% over what it was in 1985. Next year, more than 50% of the world's population will vote. These are big changes that is ahead of us. If you think about 2023 to 2025, we would have consumed 400 zettabytes of data. That is all the data that we've consumed till the 21st century. We are fresh off the Davos conference. Some of you would have seen that in the papers. Discussions galore. But the reality is, on the current trajectory, we're going to see 2.8 degrees of climate change by 2100. These have big implications for everyone in this room. But what is the shining star among all of this? And I started with that. Change is inevitable. Growth is optional. We in India, I think, have truly and completely taken on growth as the big agenda forward. And I think very appropriately, the conference is called Growth for All. If you look at a simple metric of all the banking across the globe, since financial crisis, global banking has actually lost in terms of performance, whereas India has actually stood out across multiple years now. P by B for banking across the globe have fallen by 66%, where India has continued to shine. Let me show you a few metrics. Of course, we have our ups and downs, but a few numbers that really stand out. The return on assets for the Indian banking industry has actually gone up by 10 basis points. We are actually on an all-time low when it comes to credit costs. So yes, in relative terms, there are a few metrics we've fallen, but we've actually done much better than the globe. And the reason, and I had this discussion before coming here, the reason we go to every conference and see a room full of packed audience is because the growth ahead of us is significant, and we are all looking for innovative ideas on how do we fuel this growth going forward. Maybe 3 imperatives when we are really thinking about banking as a sector, and I think after my session you have an incredible lineup of speakers who will actually bring this to life. But 3 areas that we are seeing as big changes that will happen in the market over the next couple of years. One real change in terms of the business model, whether it's the distribution that we've seen evolve, and I'll take you through some of that, whether it's the digital infrastructure of this country. I actually have the pleasure of working with a lot of global firms, and it makes me so proud to each time draw India on the map, especially when it comes to financial infrastructure, right on top on any benchmark, and really have sessions on what we can learn from India. The tech transformation, I think every year we say this is a big year for tech transformation. We've been saying that now for probably 20 years. And every year technology throws something at us which allows us to say, again, this is a great year for technology. I think Sandeep, had a funny story about the homework machine. But whether the answer is right or wrong, the machine's not going away. I think Gen AI is one of those which, even beyond the hype, are starting to show some real use cases, and especially real use cases in the banking sector. The risk maturity, as well as climate change, which I started with, along with a lot of policy interventions that will come our way, is going to make sure that we really think about resiliency as well. We went through multiple big episodes where we were tested, and I think Indian banking came out very strong. But as we go forward as well, the regulatory environment will change, and I'm sure you'll hear about it today. But more importantly, simplistic methods in which we used to earlier think about risk frameworks for climate will have to, fundamentally change. Climate, for example, is something that is both very exciting for all of us because there's $2.8 trillion of lending which is expected to support climate over the next 10 years. That is a very, very large number. But what is equally worrying as well is 50% of today's lending book is exposed to very serious climate risks, whether it's our exposure when it comes to some of the markets, the geographies, and the type of loans that we've supported. So some of these really become very real as we start thinking about what's ahead of us. Let me take the first one, distribution model. It's great to look at this picture because, I've been doing these sessions maybe for about 15 odd years now. There were times when people would say, do we shut down all the branches, right? It's all digital going forward. Or there has been conversation that, many of these old school methods don't make any sense anymore. This is actually what has happened to banking, right? So when we started discussing the 60,000 branches that were there in 1991, there was a real discussion around, maybe that'll stay stable, maybe something will change. We are at 150,000, and year on year, we typically see about 10% growth in branches. But that doesn't mean it has stopped other distribution channels from coming on board, whether it's all the digital channels. And in the last couple of years, what we've also seen is a real proliferation of companies outside of the banking sector coming in and playing a big role, right? Which we call embedded finance on that far corner there. Whether it's our fintechs that have been in the market, and they are at scale now. I think a few years ago, we used to still think about it as nascent businesses, but many scaled fintechs actively participating. I just saw the numbers of payment companies. I think the top 3 tech companies which do payments in India today are doing 96% of the volume. So that number has also climbed pretty significantly over the last couple of years since we've started discussing. So distribution has changed, and changed for the better. We are reaching the last mile. We are able to access people we were never able to access before, and we are actually building for convenience. So someone like me probably can access 4 out of these channels that are out here, and the channels are being built for purpose. That's actually what the big change has been. But if you think about somebody like Shekhar Yadav, who's a very different portfolio from where I stand, sitting in Kanpur, doing his business, can actually visualize a very different life for himself, which was impossible a couple of years ago. He can actually now have an end-to-end digital journey. something which was impossible. He can have a very good credit score. He can get cash finance. He can actually do almost all his transactions digitally if required. So the world is changing, the world is digitizing, but more importantly, not for people like most of us in this room who already had good access. But the change is actually impacting the people who actually were not able to get that access. And I think that is why this topic is so relevant and important. A lot is changing, but I think at the same time, a few things to think through. We are going to see a big proliferation again of consent with the account aggregator system finally coming to scale. We will have to figure out what is the consent management infrastructure going forward. Consent management was, kind of the outcome that was expected at some point in time that will become core of how you think about many of the technologies you'll roll out. And as you have the discussion today, which tech and which infrastructure allows you to do that will be important. The turnaround times are just getting shorter and shorter. I think Sandeep mentioned 60 days to new product launch. Customers are just getting used to faster and faster loan approvals these days. And that is going to apply across the board. The time's going to keep getting shorter, especially for new-to-bank customers as well, who earlier was fine waiting and looking for documents and providing documents. They have very different expectations of bankers these days. If you think about products, for the longest time, we actually stayed with our core products. We had products, and we've just found customers who were willing to take it. If you think about some of the discussions we've started having already, there is innovation at a product level. There's innovation for miniature products. There's innovation for very tailored products for people like Shekhar Yadav that we just spoke about, which is very different from how we typically had a set of 10 products which we were trying to kind of make sure we just saw growth on it. Last but not least, I think everyone in this room is well aware, the expectations of customers just keep going further and further up. Banking no more is compared to another bank. Your peer set has changed. You are compared with an Apple when it comes to user experience. You're compared with a Flipkart or Amazon when it comes to call center response times. So the peer sets in terms of benchmarking has changed mostly because of the awareness that has come through. I think, no conversation is complete without a Gen AI conversation these days. The reality is, beyond the hype, there are real use cases. An interesting way I've at least heard a few people describe Gen AI versus predictive AI is the left brain versus the right brain. Everybody in this room have already installed some version of predictive AI in your technology. They've been helping with your risk models, a lot of the data analytics, a lot of the left brain activities, right? Your risk models have been doing AI now for a couple of years at least. The true power comes in when both comes together. How does the predictive AI start talking with the generative AI? And one of the big use cases I think everybody in this room should really think about is how do you move the unstructured data that you have and start using it? All those sales conversations that was recorded over the last 15 years, we've never been able to actually use any of the content there. We're very proud we recorded. We're very excited that it's stored somewhere in our systems. But that kind of unstructured data can really be taken now to think about better customer experience, better journeys as you go through, as well as just giving personalized service to most of your customers. What's going to allow us to do all of these great things that I said? I think ultimately this will need significant infrastructure investment from a technology perspective. And I think in the banking sector, we are very blessed. We have a lot of technology companies very actively thinking about how tech infrastructure is going to come together. But just to give you a sense of the market, if you look at the US, they got $258 billion of investment between 2020 and 2023. And you can see there was almost a 58% investment on fintechs catering to technology investments, right? So tech infrastructure companies versus the consumer-facing techs. If you look at India, we've actually done a bit of the reverse. So all our investments in the last couple of years have been very much around the consumer-facing fintechs, and a lot less when it comes to the core infrastructure. In the next decade, this will have to flip. And forget the decade, the next couple of years, this will have to flip. If we need to get to the 30 trillion economy that we're all talking about and clearly gunning for, we will have a gap about 100 to 150 billion dollars that will need to go into the tech infra players. And that is going to make the big difference when it comes to a lot of the digital talk that we have in terms of seamless journeys, turnaround times being minutes versus hours. This is what is going to make a big difference. And I think many of these companies probably I have on the page are here. So congrats, you have truly digitized a lot of the banking sector. And it's across the board, whether it comes to sourcing and onboarding to very complex and advanced risk models. It has been across the board. So congrats to everyone here, but I think the short point I'm making is that there's a lot more work ahead and a lot more money required for us to go ahead and do this. The biggest change, I would say, since I've had conversations on the fintech market, is a very clear shift from a couple of years ago saying, how do you compete? How does the bank compete with the fintech? And the best ray of hope that I have seen this year across the board is the C word has remained, but competition has moved to collaboration. I think across the board, there's clear recognition that the success for this sector and the growth that is going to come from the sector is going to be from collaboration and not competition. So with that, let me finish a few things for you to keep in mind. We will have to think about how to do these collaborations faster and quicker. Sandboxes, whether it means accreditations, audits, just how do you come together more quickly as a banking sector as well as a fintech sector. And with that, I think I also have the pleasure of having a conversation with one of the fintechs who is actually supporting the conference as well, DV, who's the CEO of Lentra. Can I invite him on stage, please? Hey, DV, welcome.
Thanks.
The stage is so big. I think, we've been put quite far away from each other, but great to have a conversation with you. I think, DV, a lot of what I said earlier in the session as well is about growth and, supporting growth for all the bankers sitting here, all the fintechs sitting here. And I know fintechs are playing a big role. We see it from the outside. We see it within the banks. What do you think has changed? How has the fintech and the banking collaborations changed over time?
Banks were wary of fintechs when we started our journey 6-7 years ago. After the initial incubation and the formation of Lentra, we've seen that the banks are very eager to collaborate, experiment, and move ahead with solutions that we have to offer. As with all banks, they're highly risk averse, and that makes the timeline stretch beyond the initial estimates that most fintechs have in their plans. So the fintechs that can't survive the long term and survive the stretched timelines don't cut it, and the ones that do end up servicing the banks.
So speed has become one of the pivotal changes?
Indirectly, yes.
Got it. I think, DV, maybe a thought, and many of us have been seeing fintechs in the market come about. But what is the innovation? Right? What is different? There's a lot of fintechs in the market. What is different now?
Time to market is the key for most banks. They know what they want to do. Unfortunately, banks are structured in a manner that they can't do it in-house and they can't do it themselves. Given the choice, that would be the best approach for banks. So they rely on fintechs to get it right the first time and enable the bank to go to market with the product innovations that the banks want as fast and as reliably as possible. So the fintechs that have innovated at scale and with great reliability as the underlying foundation have done well, and that is continuing to fuel our own growth.
Right. But when it comes to lending growth, I think, challenges galore, and we'll probably hear a lot more from both the regulators as well as the banks later today in terms of how can the lending growth story truly come alive.
I think India is really blessed, and we are the top dog, I think, worldwide with 200 countries. This is the only space where we are number one in the world. We're very lucky that the government put in an infrastructure that's free for our use with UID, UPI, all of the components that build the India stack, Sahmati now, ONDC, OCEN. I mean, the list goes on, and the regulator along with the government are jointly innovating through various mechanisms to open up the market for financial innovation. The market is driving the innovation, and the banks know what they want to do, but the gaps are getting closed much faster with this fairly large infrastructure being open to everyone's use, and that has really fueled the fintech revolution or the transformation in India. And as time goes along, the regulator is also working on standardizing some of the key aspects. The two very, very large aspects are cleansing of data. The data that's available in India is very, very low priced. So the government is opening up several data sources, but the quality of data has to improve, and I'm sure they're working on that. The second piece is for them to fix a mechanism for IDNV, which is identity and verification mechanisms. We are a growing country, and we don't have the, and it's an extraordinary population. We are number one in the world on the population front also. So that makes it a double-edged sword. So we have to fix our KYC norms, and we have to cleanse the data. If these two can be done in addition to what we have done already, which is phenomenal, I think we will open the doors up for getting to that 7 in 7. I mean, 7 trillion in 7 years is what the central government has, the boss has spoken. That's a 10% growth year on year. It's an impossible task in my opinion, but if we get even close to that, we would have added a Netherlands year on year. So it's that big a growth. And I picked on the Dutch because at one time, not too long ago in history, they were set to rule the world. So that's
got it. Adding a Netherlands year on year. I think that's a good one to take. I think when we started, we heard quite a bit of discussion around what Lentra does. Maybe a bit more specifically, what's different, and maybe an example for the audience where, you were able to introduce an innovation into the sector.
Yeah, so when we started 4.5 years ago, the agenda and the vision was extraordinarily clear for us. We set out to build a platform for assets to enable and empower the banks to do their business. We never wanted to get into lending ourselves. So we are a technology solution provider, but the vision statement that I had 5 years ago when we seeded the company and 4.5 years ago when we launched the company was that we would build all the software solutions that are required for banks to do their assets business or the advances business or the loans business. And in that approach, we decided that we would have a modular approach to all the pieces, that we would not build a platform from left to right and force the bank to use all of it at once. That was not going to happen. So what we did was we built the whole set as a jigsaw of modules that the banks would choose where to come in and where to exit and what pieces to piece together and use. So that's one of the big things that we did differently. We also moved to a consumption-led pricing model, and that's worked well for us to gain an easy entry into some banks who want to try. If it works, then buy, while minimizing the risk of how much of money will go out in the whole process. So that is the second piece that we did. And in doing so, we focused that we could then build all the pieces and assemble a flow or a set of journeys for the bank in double quick time. So time to market was the focus for us to have all the pieces ready before launching. And one of the big examples of that success was when we got a call in, I remember this was in early August, from one of the large banks in the country. They wanted to launch a cattle loan. I hadn't even heard of a cattle loan. So they said, this is the cattle loan journey and we want to go to market in less than 2 months. And there was some pressure from the regulator to get this done. So we thought this was a very esoteric product because I didn't imagine that the cattle loan would be a real product. But we assembled it and then we tried it. We put it into production in under 8 weeks. And surprisingly, that journey was demonstrated live in the G20 summit 2 months, 3 months ago. I don't remember, but not too long ago, the G20 summit, this product went live and our name came up on the webcast. And I was so stunned that this is what they were up to. But assembling a journey and getting it to production in 8 weeks is reasonably transformative for banks. We haven't succeeded on all fronts, but it's work in progress, but that's the direction we are on.
Got it. And is there something that, on the other side, when the banks partner with you, allows you to bring the speed to life?
Sorry?
So the speed point that you made, 8 weeks to go to market with a new product seems quite unheard of in most products that we see. So what on the other side does the banking partner have to do to facilitate this?
We don't demand too much of the banks. We let the banks be the way they are because any change within the bank just delays all the projects. A bank is a very complex organization. People tend to underestimate the complexity. Even if the CEO wants something done, it can't be done rapidly. They are built in a manner that they will avoid risks, even internal risks. So the structure in banks do not allow them to move very, very rapidly. So what we have done is we have constructed all of our technology solutions on the outside. So we stay outside the perimeter of the bank and we give the bank the option of moving the solution into their perimeter at a later date. So one of the big steps that we did was we are fully compliant, accredited, certified and audited by several agencies. So we give them the confidence that the data is safe, and it is. And that they can get to doing their business immediately.
Got it. And I think, DV, touching on that point, and, I mentioned as well, there's a lot of collaboration in the industry that is starting to happen. A conference like this really brings all the right people in the room. What more can be done to really make sure that we thrive as a ecosystem over the next couple of years?
Oh, that's been one of the cornerstones of our journey so far. I strongly believed, and I continue to believe, that collaboration is the only way to solve the entire jigsaw. It's so complicated that when the bank implements solution one from vendor one, if you can't coexist, you're done. You will not even be considered. So on day one, I took inspiration from one of the big wallet companies. They had gone and, free of charge, they had gone and collaborated and pieced together all the utilities in the country. So you could pay a utility bill off that wallet in about 5-6 years ago. So that inspired me to say that we should be in the ecosystem, wired in completely and fully tested with every other partner that exists, irrespective of whether the partner is a competitor or a collaborator eventually. But all competitors and all ecosystem players are collaborators as far as Lentra is concerned. And once that happens, then our platform is wired with every ecosystem player that exists, and banks find it easy that way to just consume whoever they choose to consume off, but work on our platform. So,
great. No, that's good to hear. And I think, DV, maybe to finish off, one thing we've been discussing a lot is India for the world. We are the best when it comes to some of the technology, the infrastructure. What role are you thinking for Lentra? We're quite successful here. What does it mean for supporting the world in terms of digitization of banking?
We'll move with the India government initiative of introducing all the components that the government has built for our use here. And as and when the opportunity opens up, we are testing the waters in those emerging countries.
Got it. Excellent. Thank you so much for taking the time. Audience, any questions? Otherwise, I think we are on time, so we'll wrap up.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.